All right, welcome to the new weekly review for the third week of February 2026 for the NASDAQ delivery March contract. Let's get started. As you know, we always start by looking at the daily chart, and let's see what's happening on the daily chart. Last week, we said that, okay, we want to see Monday open high, go into the daily suspension block and show us a rejection, and it did that. Friday, Thursday, Wednesday, Tuesday open, Monday open high. We see consolidation and then rejection. While we did that until previous Friday and half Monday, we made a daily fair value gap. On Tuesday, we took out Monday low, made a doji candle. Obviously, the next day would be bullish. We did that. We saw rejection from the daily fair value gap. Thursday consolidated between the range, and Friday took out the previous day low, went towards the previous day high. So this week we were anticipating more of either going here or inversing the fair value gap and go up. At the moment we have inversed the fair value gap. So when today's market opens, we'll see what happens. Let's look at the Monday 1 hour chart. Monday open high, low, and then close. You do realize that this is the previous day high and this is the previous week low. And this is an important fair value gap from the previous week that I extended forward. Even this red area over here, this red area over here as well. So we see that we go up, make a daily SMT and inverse this important fair value gap area. And my point of interest would be this blue area over here. So let's get down to 5-minute chart. Monday open high, take out Asia high over here. It makes the London high as the high of the day on the bank holiday. 9:30 open low takes out the Asia low right here. NQ taps into important hourly fair value gap at macro time. So what does this tell us? This tells us that everything is aligned and we can take a long at this fair value gap. And that's exactly what I did. When we went down into this fair value gap, we made this 1 minute fair value gap. We inversed it and I entered on that, taking out the relative equal highs over here. And then it reversed. All of this happened in macro time. Now I want you to understand one thing. This thing will repeat throughout the week. In our macro time, we inverse the first fair value gap and then that's our trade. That's it. These two things. Let's go to Tuesday, 1 hour. I extend this important fair value gap again from Monday over here. This I will extend this one, but this one is below this one, which was also an important fair value gap. Again, I marked a new fair value gap. Why this is important? Because we took support on this one before and then see rejection taking out this low, which makes this fair value gap as an important fair value gap over here. So this is also an important fair value gap. I haven't notified it here because we have too many of them. So just to keep things clear, I select few fair value gaps within ranges. This one and this one and this one later if we see if we are going up. If we come down, then we don't need this and we will use this one. So this is what it looks. Tuesday open lows, take out previous day low and went towards the previous day high. Tuesday opens and consolidates, takes out Asia low and makes a low before an important fair value gap here, making it a suspect low. 9:30 open high, make an engineered high before Asia high over here. This is the Asia high, while taking out London high. Now, because 9:30 open high ensures rejection on an important hourly CB, it makes the obvious target of the low before important hourly BC. So we saw rejection on this CB. I want it to go into this BC to take support and then come back, take out this Asia high. So on a 1 minute chart, this is the trade I took. This is just an example trade. So again, I want you to notice one thing. During our micro time, first inverse fair value gap, boom, take the trade. Two things, you only need two things. So NQ made equal lows when it rushed up over here. Right here, it could be your target. We went up, made a low over here, went up, break that low, change state of delivery, fair value gap, inversed it. We could have entered right over here, but I did not. I was late on the charts. At 9:45, I was looking for a new opportunity. This was an order block. If we are expecting lower prices, we want these up close candle to show rejection so we can enter on it. And I entered on this order block. Went down, took out our target in less than 5 minutes. Now, if you want to trade another macro, in that macro, we had a fair value gap. We made a low, we made a high in that fair value gap, broke it, and we enter as soon as it breaks it over here. Or we could have entered on this order block as well, targeting this open fair value gap over here. That's Tuesday for you. Now looking at Wednesday, this fair value gap I extended now because we're not looking at the previous blue ones. We are just looking at this red one. So I extend this one because it's an important one. As you can see, we saw support over here. We saw support over here on this one, here as well. And then when we inversed, we saw support over in this area again. And now I would like the price to come back into it so we can take another trade towards this important fair value gap or the daily fair value gap. Now let's go down to a 5-minute chart. NQ consolidates on midnight open, then takes out the previous day high over here. NQ 9:30 open low sets the stage for bullish run towards AM high. Before 9:30, NQ takes out London low and taps into an important hourly fair value gap, which means that we will go towards what? London highs, or this open 1 hour fair value gap, daily fair value gap over here. Obvious target is daily fair value gap that was created last week. Now I did not trade on this day, so I'm just speculating based on hindsight. As you can see, we had a high resistance liquidity run. We slowly grind down. 9:30 opens. We consolidate for a little bit. The first fair value gap that we see in our macro that is inverse, we can take that entry towards the obvious targets into the daily fair value gap. Now, as you can see, this is the same as the previous days. During our macro, the fair value gap was inversed and we took the trade. There was no fair value gap before that. So this is low resistance. You can see it took a lot of time to come down here and then it went up in a few minutes. That's Wednesday for you. Let's look at Thursday. On Thursday, I still moved that important fair value gap towards Thursday. Moved this one as well because it showed support throughout and we saw support over here as well. Here again. And then eventually we took out the previous day low. Let's look at the 5-minute chart. Thursday open high in daily fair value gap. Now I'm expecting rejection from this daily fair value gap on Thursday. We make the high of the day in that daily fair value gap. We go down, take out Asia low, but I'm still bearish until we tap this important fair value gap. We leave relative equal highs for market open targets over here. All of this. Make a low before an important fair value gap, which makes it a suspect low. Again, I always mention this. We tap into an important fair value gap after 9:30, and then we target the relative equal highs into that important fair value gap again one more time. Okay, again, I did not trade on this day. I am just speculating based on price action and hindsight. 9:30 open lows into an important fair value gap. During our macro, we inverse this fair value gap over here. Now, if I was trading this day, this would have been a loss for me over here, and I would have entered again on this towards the relative equal highs. Not much target, just 60 points, but still a good one. I would have entered on this over here, right about here. Because this is too far away from here, I would have entered on retracement. Inevitable loss. Look at this. Based on our model, this is a loss. But it gives us another opportunity right after that. And we enter. Again, simple thing in your micro, take the trade in the inverse fair value gap. Now, whenever we trade inverse fair value gap, our obvious stop loss is always below the low. So if we had put our stop loss over there, this would not have been a loss. Let's go to Friday. Friday was the easiest day of all. On Friday, we see support on this fair value gap again, one, twice. We go down, take out the previous day low into this blue important fair value gap, which was my point of interest, and then we go up, take out the previous day high. Now, Friday opens and consolidates, and we see Asia high and low are made next to each other almost, see? London high is made before the previous day high, and the daily FEG making it a suspect high. So this is an obvious target that we want to take. 8:30, we have a news, makes us the data high. We take out the previous day low, make an important fair value gap, and it is taken before the market open. 9:30 opens, taps into our point of interest, which is the important fair value gap, and go up, taking out previous day high. Now this is the trade that I took on Friday, and I posted it as well. So market makes a big move before our macro time. I did not enter because it was not my macro time. I made a range of this to see where the price could come back so I can trade again. And I was expecting it to come back into this, but it did not. What happened was that we need to realize that the actual target is London high and previous day high, so this inverse does not matter. I was just looking at the fair value gap that was made during the macro time, which was this. A high was made in this, and then we made a lower high, a higher low, and that was the mitigation block. This was the order block, previous order block. We went into that, and then I entered on this inverse value gap again, targeting the London high and the previous day high. And I mentioned this thing over here. This will leave a lot of traders thinking that we are reversing now, but this is just an engineered high before the London high over here. And that marks the end of our review. And as always, thank you for watching, and you can find the link to the PDF in the description. Good day, good trading.